That should be better now. You should be able to hear me now. So a very good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. Hello, Ben. Good to have you as always. Suneth Shwa, great to have you guys. Salman, Mohammed, Ifam, good to have some regular faces here. Biwa and Akthutha, great to have you on board. Now, just as folks are coming in, don't forget that the whole idea of these webinars is that you get to look over the shoulder of someone with a professional trading background, so you can see how I go about analysing the market, so you can understand the way to process the fundamentals and the technicals, the necessary components of trading. And the whole idea of these webinars is that it's an educational perspective thing to be aware of. It's not about signal service. It's not about you know, take this trade, don't take this trade. It's all about providing education. So I will be explaining different entries, exits, different currency pairs, but the whole idea about this is from an educational perspective, just to make that clear as we get going. For the session ahead, we have the special topic this week, which I'm looking forward to explaining. It's how to buy the rumour. It was a trade that I took a few weeks ago, and I just closed it out fairly recently. I just want to run that through with you on the European Recovery Fund, how we were buying the rumour of that deal. And also, I will be going through some of the trades we were looking at on Monday with the silver and gold, because there's quite a few learning points with those trades that really took off very, very aggressively. And I'm going to show you how I managed that. And hopefully that's a good learning perspective, and you can see how you can take advantage when you have these these vicious trends where the fundamental bias for silver and gold has been very strong recently. We've had low interest rates around the world, more Fed stimulus expected, the danger that currencies lose value with so much quantitative easing going on all around the world. Gold has offered a place of safety, and silver's been catching up recently too. So we'll be going through some gold and silver trades as well. Don't forget the handout for the session is in the handout section under workshop handout. That is the template through everything I do. Essentially, when you open that handout, I'm just going to open it up for us here. You can see that the handout looks like this. These 5 principles, looking back, looking forward, looking at the charts, looking at risk, looking at the outcome of your trade, are the principles that I use every single day in my trading. I'm always using these principles. It's become second nature for me. So particularly if you're trying to get a routine for trading, print this out, put it by your desk, and make sure you are following each one of these different headings. It will really help you as you get to grips with trading and finding a solid routine to use each day. If you've got any suggestions for special topics, email me here, giles.cochran@hycm.com. I'd love to help you with any topics you had. Maybe there's a technical indicator you want to use, maybe there's a fundamental aspect you want to master, or there's something drawing trend lines, reversal signals, continuation signals. Please email me, and don't forget to use the chat and the question box here as well. Mohammed, yeah, thank you. Good afternoon, Shwa, to you. Mohammed and Shwa, you've both used the question box. Please do, to all other attendees, use the question box. Remember, this webinar is a special webinar because it's only for HYCM clients. So this is one of my favorite webinars of the week, because I get to develop a relationship with our very own clients. So please do, yeah, use this. Mohammed, that's great, thank you. Yes, the handout is in the section under the handouts, Salmon. And in terms of daily analysis, I do that on the Telegram channel. So if you see the Telegram channel here, it's under Forex Trading Smarter Investing. And each day, Forex Trading Smarter Investing, each day I do some analysis on the markets. So you can see, like, the start of this week, that was the one I did for silver at the start of the week, which you can see when silver prices was at 1930, that was a pretty handy little heads up to get before, you know, prices really rocketed. So do check out the Telegram channel as well. That's a good resource. Great. Yeah, that's super. Thank you very much. So what we'll do is turn to your handout, make sure that you're following this, and at least you've got the understanding as how this works. And the key thing, the way I've been able to really condense this to make it as simple as possible, is every time we're trading, we want to back the strong against the weak. It's one of the very first principles that traders are taught when they want to trade for an institution, for an investment bank, anything like this. One of the key aspects is to trade a strong currency against a weak currency. So just like in this picture, we'd expect the strong arm to beat the weak arm each day for this session or maybe upcoming sessions. We're looking to find which currency is going to be the stronger, which one's going to be the weaker, and we want to pair them up together. We want to pair those currencies. So now let me just show you on the other screen. That's it. I'm just going to. Now, if you look at this currency pair here, this is the pound Australian dollar currency pair. And this is the dominant currency sentiment pair for the session. Now, we have reasons for British pound weakness. And the reasons for British pound weakness are the reports that the UK is losing hope of a post-Brexit EU trade deal. That is negative for the pound. Now, we know that the pound has to sort out a trade deal between the EU and itself to have any chance of strengthening the pound. And there's been a fresh wave today of pessimism about that happening. The pound is weak. We alternatively have the Australian dollar is strong. Now, the strength of the Australian dollar is a number of reasons. We've had Governor Lowe, who said he's not worried about the strong Australian dollar because commodity prices have been so strong. Copper prices, gold prices, iron ore prices have all been strong, supporting the Australian dollar. And there were worries that Governor Lowe would say, I'm worried about this strong Australian dollar. We're going to be looking to actively weaken it. Instead, he said, no, it's not surprising it's strong. So the strength of the Australian dollar was accepted by the RBA, and that was taken as a bullish cause for the Australian dollar. Similarly, the income support scheme out of Australia has been extended, so there's more stimulus for the country. And the negative interest rates, the RBA said that's not an option for them. So that's a number of positive drivers for the Australian dollar. So as a result, what we expect to find sellers on the pound Australian dollar currency pair. Now, for the rest of the session, until the close of the US session this evening, intraday, we are expecting pound Australian dollar sellers. So if we got any retracement back up to this support, this S1 pivot zone, this is the S1 support zone on the daily pivots, any return for that 1.7800, you can find sellers at that. We would expect to find sellers at that level. Now, stops could be run just above that 1.7935 level and looking to take profit back down in that 1.772 region. Okay, so looking for a move down from that 178,800 handle, roughly back down to that 1722. So about sort of 60, 80 points move would be looking for on that pair. Now, pivot points are a great way of finding different places to enter. You can see that 1.7800, significant big round number. Psychologically, the big round numbers have importance. So any return up to that level, we would expect to find sellers. Now, what could change the outlook? Well, what could change this outlook if we had some positive Brexit news? If we had positive Brexit news, we could see the pound move much higher and break through these levels. So you have to be in tune to the news. Secondly, The other thing that could change this outlook is if we had really strong risk-off moves come into the market. Now, there were some gentle risk-off moves that came into the market earlier today when the US demanded that China's consulate in Houston had to close in 72 hours. Now, that produced some risk, and China retaliated and said that they would ask the US consulate to move out of Wuhan in China. So there was a little bit of risk-off sentiment that came into the market that has been weighing on indices, and as a result, there's a little bit of indecision in the market. But at the moment, that negative sentiment is not enough to weaken the Australian dollar, and the current sentiment remains in play. But you need to be aware of those because they could change the outlook. Now, other things to be looking ahead for, there are some other risks coming up. We have Canadian CPI data that is coming out at shortly, and that has the potential for moving the Canadian dollar. We also have at 3:30 GMT time the oil inventory data. Now, at the moment, the oil inventory data last night showed a surprise build of 7.54 million barrels. So I was going to show you the oil chart. There's something very interesting in the oil chart that I want to show you, and it's this. Okay, now let's just get rid of that. Right. Okay, so here we see this strong uptrend has been building in oil. Okay, the risk on sentiment yesterday pushed oil up above that 41.50 handle very nicely, but then prices pulled back a little bit from there. Now, last night the private inventory data showed a surprise build. There was an increase of 7.54 million barrels per day. Extra oil was in the market. As a result, we do see a little bit of weakening in oil prices. Now, we have the private inventory data due out shortly. Let me just see if I can get my economic monitor chart up and running. Hopefully I can. Let's just give it a second. I had a problem with this earlier. I'm hoping it's solved itself by now. We'll soon find out if it has or if it hasn't. No, it's an error, so I don't have that. Well, let's just try. We'll just go to a free site here, and we'll just have a quick look at the inventory. Here we go. So we've got the crude oil inventories. Now, the expectations are that we will have minus 2.1 million draw. So that would be bullish for oil if we did get a minus 2.1 million draw. Now, the maximum expectations, I can go from memory, is if we get sort of a build of 7 million. Now, if we get a build of 7 million, that of course is negative for oil prices. So if we get a strong build, expect that to be negative for oil prices. And if risk tone turns off all of a sudden, then look for this trend line to break. If we get a break and a close of that trend line on the daily chart, then we would favor more downside in oil. There are concerns because OPEC has announced that it's going to be cutting back on its production cuts in August. So some very big names in oil are concerned that the market's going to be flooded with oil longer term. So if we see this level break, and notice here, if this closes a weekly close, that'll be a false break of that key level, and any close below that trend line would potentially open the way for more downside. Now, this isn't just a straight oil sell. We need the fundamentals to join up. So if we get falling stock markets, rising inventory oil levels, and a risk-off sentiment tone, oil looks primed for some very good place to potentially sell. So look out for that. We could see some continued downside in oil coming up in the coming weeks. So one to be aware of, I wanted to run that by you. Now, the other thing I want to run by you, of course, is the silver and the gold trades that we were looking at this week. Now, I'll show you how we played this gold chart. Now, this is the way how you combine the technicals and the fundamentals. Now, on the Monday of this week, on the Monday of this week, I was explaining how I had bullish reasons to be bullish on gold, and the reasons to be bullish on gold are because the countries are cutting their interest rates around the world. With inflation still above sometimes the interest rate, it means that actually cash in the bank loses value. In that kind of situation, it's better to put your money into a commodity like gold, and particularly during a global recession, high net worth individuals are encouraged by their investment banks to put a portion of their portfolio into gold. And you can see, you've only got to look, over the course of the whole year, we've seen gold strongly rise. These rises haven't been a surprise. I've been speaking about them for months. So I was looking at a way to get in to the gold market. I was bullish gold, and this is just a way you can simply do it. Just a simple trend line drawn across the top of price, and I was trading a simple breakout at the 1815 level. And this is how I played that move. Let me just show you here. Right, so here we had that trend line on the 4-hour chart. This is my trading chart, and you can see here the blue arrow and the red arrow, or where I've taken a profit. Okay, so here I have a very tight stop, just playing for a break above that high, and on the 4-hour chart got taken in, and I took one position off the table at around 1817. And you can see I've got a further 2 positions that I've kept at break even. Now, just to follow up with that, now I've taken my second position off after we had that enormous run higher. Now, the reason I took my second position off here is for a good learning point. Now, it's this: whenever you have a strong run higher, and whenever you're moving into a key resistance level, like here, you see way back here from 2011 all-time highs at $19, $20 an ounce, you can see that price moving into that level is an obvious place to take profit. Many times, when a trade moves into a key overhead resistance level, it pairs back. So you can see here, look, that overhead resistance, price moves in, sells off, moves in, sells off, moves in, sells off. Okay, whenever you have a key support and resistance level, it's very rarely indeed, do you ever expect to have price break through the level. It very rarely will just smash through. You get some kind of resistance, some kind of pullback. So that was the reason for taking some of my position off the table there. So I take a little chunk, I've taken a much bigger chunk, and I've got a third position which I'm now going to leave, and I'll show you how I'll handle that. What I'm looking to do here is I'm looking to trail the daily chart. So what I'm expecting price to maybe move up here, maybe test about that, and at some point pull back. And then as the price pulls back, I'm either going to get stopped out at break even, or I'm going to move my stop in below the high of the breakout. Now, the other thing that I can look at now is look at potentially re-entering this trade. So if I get a pullback here and then a move forward and a pullback, I'll draw a trend line across the top on the 4-hour chart and look for another breakout. So so that's what I'll do there. And again, I'll show you, this is how I traded silver. Again, silver, you see that it was that simple trend line. As I flagged to HYCM clients on the Monday Telegram channel, we had that significant break and close above that level. Now that break and close above that trend line was highly significant. Anytime you get a trend line break and it closed, this is the weekly chart. So whenever price breaks above that trend line, and you see it's a very good trend line, its prices with their furthest extreme. So as soon as price is going above that level, that's a little clue. Now, fundamentally, gold rises in a recession, and so too does silver. And if you look at silver, silver has a lot more further to run. It nearly hit a high of $50. It's now like $22. So there is a long way for silver to potentially run. So I took a silver long from that simple level here at that weekly chart, and you can see here that no, that's not the one, not the one, that's the one. And this is the trade I took, and I took all my position off heading in to that key overhead weekly resistance, because normally you will expect some kind of a pullback, some kind of reaction there. Now this was an unusual circumstance, because you can see that price moved into that overhead resistance level and smashed through. So that is very unusual price action, and just shows how bullish the silver market actually is. Where you could potentially enter this trade is any return at the moment back down to that sort of 21 region can be considered suitable for longs, and 20 and below. Anywhere, any pullbacks into this level could be considered suitable for longs. A good way of looking at this trade is to see if we get a pullback, and you can draw a trend line across the top and then wait for a break of the trend line on the 4-hour chart, because there are bullish reasons to be gold. So that's one technique that I'm looking at using. Now, what would change the outlook for gold and silver? Well, obviously, if we had like a really effective COVID-19 treatment that made COVID-19 not an issue, something, so good, like, if you take paracetamol, 3 times a day, COVID-19 solves it. If it was something ridiculous like that, then all of a sudden we'd have central banks looking to raise their interest rate, looking to get back to normality. So that could change the outlook. Also, the other thing that could change the outlook, if we had a lot of risk-off sentiment. So did you see what happened to gold earlier in the session? You'll see that in the session we saw some of the gold gains falling quickly on that negative sentiment with the US-China tensions. When the market gets really worried, you do see gold sell off. Okay, similarly, you would see silver sell off as well. There's sort of fundamental reasons for that. Traders sort of rotate out of equities, and they offset those losses with the gains they've made in the gold and silver markets, particularly the gold market. So that could negate this outlook. So it's not without risk, but they're the main risks that you would have with gold going forward. Now, I also want to share with you that key trading principle, which is buy the rumor, sell the fact. Now, this was a trade that I took at the start of the month, 7th of July, and I closed the trade off at the end of last Friday. Now, this is the reason. This is how you buy the rumor, okay? You know my principle, pair a weak and a strong currency. Now, at the time, the start of July, the Australian dollar had reasons for weakness because COVID-19 cases had shown a resurgence in the second most populous state of Victoria. Now, that was resulting in some Australian dollar weakness. The euro, on the other hand, had dropping COVID-19 cases, and there was anticipation of this 750 billion euro relief fund package that was due to be discussed and possibly agreed upon over the last weekend. So this was a real hope for the euro, and most market participants were expecting the European Relief Fund to be agreed and arranged, and indeed it was. As a consequence of that, we were anticipating euro strength into the meeting. So this is why I bought the euro into that meeting, and I bought a total of 3 positions. I bought at different levels. I've got 2 here marked on the chart. 2 of them got stopped out at break even or just for a very tiny loss. But the 3rd and final position I held into Friday and made 100 points on that position. That's just the way you buy the rumor. Is this: you wait for a big event, something that's expected. It could be something like an interest rate hike, which would cause a currency to appreciate, or an interest rate cut, which would cause a currency to fall. And then in the run up to that meeting, you you buy the respective currency in anticipation of the event. Now, notice I closed the trade on Friday. Now, if you look at Euro Aussie chart, you could easily have gotten some more points out of this trade. But I didn't know on Friday whether the fund would be agreed over the weekend or not. And if the fund wasn't agreed over the weekend, the risk or the fund, people walked out as they almost did from the fund's discussion, then you could see a gap down in the euro pair. So I didn't want to take that risk. So when you're buying the rumour, you're literally buying the rumour. And the second half of that statement is when you sell the fact. So the reason you get a buy the rumour, sell the fact response is because once the event happens, unless there's something extra to boost the currency forward, often the actual event gets sold. That's why you can see in the currency markets, quite often you'll see something that's good news seems to work out bad for a currency and vice versa. It's because traders trade in anticipation. They always want to know what's coming, what's next, what's on the horizon. So this is how I traded the Euro Relief Fund, and you notice my trade was done and dusted before they even sat down to discuss the fund. That's how many professional traders go about their trading. That's how you buy the rumour. You move in anticipation before the event in order to take advantage of the event. So I hope that helps, and I hope that gives you some indication there of how to take advantage of that. Now I'm going to have a look now at the questions and answers. Yes, we'll look at the pound US dollar now. This is a great Shawar, thank you very much. Please do ask any questions. As I'm asking Shawar's questions on the pound, please do write in your questions, any currency pairs you want me to have a look at, any commodities, any risk events you're looking at, anything that you particularly just want some advice on, use the question and answer panel there. Shawar has a question, and the question Shawar asks is, what about the pound US dollar? Now, the pound US dollar is interesting because at the moment, there's reasons for pound weakness and there's reasons for US dollar weakness. So in terms of pairing these two currencies together, it's the weak with the weak. And what have we got? We've got range bound action. Take a look at the dollar index. You can see the dollar is weakening. The reason for the dollar being weak is that the risk on tones that we've had recently support a weak dollar. There's the reflation trade, lots of quantitative easing expected from the US. The US dollar is expected to be weak ongoing in the medium term. This has resulted in dollar weakness. That dollar weakness has helped the pound to boost, even though the pound is weak today. And the reason the pound is weak today is because of the news that the UK is losing hope of a post-Brexit EU trade deal. The pound has risen because of the weak dollar. So we literally have the pound US dollar pair at the daily pivot point. It could not be more evenly balanced than that, and that just shows there's reasons for weakness in the pound, there's reasons for weakness in the US dollar. As a result, intraday, I am neutral on this pair. You can see why. Medium term, the more indication we have of weakness coming up for the pound and no Brexit deal being arranged, that should weigh on the pound. You've got to be aware that there's weakness in the US dollar at the moment, which is pushing the pound higher. Look at this very key weekly trend line that we've got in play here. Huge level, huge line. If we get a break and close at that level on the weekly chart, it would favour potentially more upside. So that's one area to look at. The key thing to look at for the pound is if we got some positive Brexit news, Shwa, say there was some positive Brexit news, and it needs to come from a good authority, someone like Boris Johnson or Michel Barnier, a top-level official. If they said, we can see a way of getting a deal, or we're closer to a deal, or any kind of positive news towards a deal, we should see the pound rocket. So if you've got anything like that this week, then this would be a great place to go long on the pound, because you can see you can just nicely limit your risk underneath that 1.2500 handle and look for a play up to that 1.300 1.3100 handle just above. So that's a quick rundown on the pound, and that's a quick look at what's going on there. You can see that level there, providing key support for the pound at the moment, as we'd expect, given the weak dollar that we're seeing. Yeah, Chibivan, Aussie US dollar long. Yeah. Okay, Aussie US dollar long, I like. We've got reasons for Aussie upside. Government low, not worried about the strong Australian dollar. Income support scheme extended. Negative rates not an option for the RBA. US dollar weak, lovely. The only problem with this is that we're already extended at the ADR high of the day. So we wouldn't want to be going long from this market. We also have to bear in mind, Tribuvan, the negative risk tone that's in the market from those consulate comments. Now, I don't think it's going to remain, but it's something we have to be aware of, because the US did demand that China's consulate in Houston has to close in 72 hours. There's tension between the two nations. Now, the reason that's important for the Australian dollar is as follows. China and Australia have a close trade relationship. Around 30% of all Australia's GDP comes from its trade in China. That means any good news for China is good news for the Aussie dollar. Any bad news for China is bad news for the Aussie dollar. China, US tensions weakens the Australian dollar. So that's what you have to be aware of. Apart from that, in terms of going long on this pair, looking at, let's have a look, where's a good potential entry here. Yeah, that 7140 level. I like that 7140 level. You can just see we've got a bit of traffic coming in it. Yeah, 7147. So any returns at 7147 considered suitable for longs. Look to take profit at that 7177 level. You just run your stop below the pivot point, below that 7100 handle. So that's what I'll be looking at there, Tribuvan. Just got to keep an eye on risk tone. Okay. Now we have a question. What about the forecast for the Euro US dollar for short and long term? That's an interesting one, the Euro US dollar. What is significant in the Euro is we've broken above that 1.1500 handle. See, technically, you've got a cup and handle pattern. So this is setting in a kind of like bottoming pattern. So we're breaking above that key trend line. We're really rocketing higher. We looking up at that 1.1600 handle. So short term, right, we're above the ADR high for the day. So we wouldn't really want to bank on any further rises at the moment, and we would expect maybe a drop back down. Look at that 1.1500 level, looks very, very attractive. There was a very large option expiry level here at 1.1500. Now that was a call option expiry, so the buy side. So you could see by the option expiry level that you would most likely get some support there. Hard to get into that trade, so not very practical, but it's just worth bearing in mind where large option expiry levels are each day. So short term and medium term favoring Euro US dollar, a buy on pullbacks. The nice difference in Euro and US is Euro's got falling COVID-19 cases, US has rising COVID-19 cases. So there's increasingly a move towards the Euro. The fact that the relief fund was agreed is a positive sign for the Euro, because it shows that European nations have a sense of solidarity and they have a sense of cohesion that is positive for the Eurozone. Okay, let's check out the DAX. DAX. Right, looking at the DAX. Just got to be aware on the DAX of this little level here, okay? So we just want to see how price is going to operate above this level. For more upside, we really want to see that 3.3 342 level being taken out. The concern with stocks is, oh, they're just stretched. Hashik, that's the concern, is that with earnings seasons out, we've got Microsoft earnings today and Tesla earnings today in the US session. And the concern is that with increasing job losses, what will the markets actually be like as we come out of COVID-19? There's still a lot of concerns. So yes, the equity markets, particularly, the DAX supported by the Euro Relief Fund, that's all good news for stocks and equities broader term. But I've just got some concerns about any further stock gains. But I would say I'm more cautious on this, Hashik. And obviously, I didn't expect to see this huge recovery from March lows nearly all the way back up to February's highs. So I haven't expected to see that. So that has been a surprise for me. And just taking a look at the Dow, you can see similar is going on with the Dow. I would just, again, looking at this trend line, okay? That's an important trend line for me. Keeping price, with price staying below that trend line, that's bears are in control. It's above and you get bulls in control. So that's just, I feel that the Dow and the DAX are at these key turning points, and there's certainly some key levels to be looking at. And the other things you'll be weighing up, Hashik, is earnings, how are companies doing, job losses, what are they looking like, how many, what's jobless claims looking like for the US, got the initial and continued job claims coming out on Thursday, one to watch. We want to look, what about extra stimulus, how much extra stimulus, these factors will be determining what's happening, so they're the issues to keep on top of. Yeah, the way that, right, this is the way, question here, good question from Salman. How is US-China tensions affecting Euro? Right, the way it affects Euro at the moment is, you see here, you got the dollar index shoot higher. This was on the risk-off tones that came from the US-China tensions. We would have seen a corresponding shoot lower in the Euro-US dollar. So you can see here, we had this drop lower on those China tensions. So if the US-China tensions get really bad, the Euro-US dollar pair will fall because you'll see safe haven inflows into the US dollar. Chubivan, good question. When is the Brexit news? Brexit negotiations are ongoing. Now, the key deadlines with Brexit is it's basically October, which is the key deadlines for Brexit. So we have the summer months. Now, in the summer months, not a lot tends to happen in politics. So I don't think it will be very different this summer. We should have a down period. So we should be expecting more kind of range-bound action in the pound, possibly some more upside, given this US dollar weakness story. Otherwise, Brexit news could be released at any time. There are low-level negotiations going on this week. So always pays to be tuned in to what's going on, because it could happen unexpectedly. Yeah, Sunith, US dollar CAD with oil inventories, good question. Let's have a look. So, right, at the moment, what we have is we have US dollar weakness. That US dollar weakness has resulted in US dollar CAD downside. Recently, we have had this strong upside in oil. So the strong upside in oil, you can see breaking out yesterday, has been supporting CAD and driving US dollar CAD pair downwards. Now, oil inventories are out. If the expectations, we'll just run through here, our expectations for oil inventories is a draw of minus 2.1 million. A draw is bullish for oil. And if it's bullish for oil, it's bullish for CAD. So if we get a reading of minus 4.0 and below, we would expect strong US dollar CAD downside, okay? So we want to see a draw of minus 4 million and below. That would be strong US dollar CAD downside. Now, if we see a build, now remember, a build's expected. The private inventory data out last night. I'm just going to see if I've got that on this chart. No, I haven't. All right, the private oil inventory out last night, I know what it is anyway, was over 7 million. It was actually 7.54 million. So there was a build in inventories, which was bearish for oil, which is negative for CAD. Okay, so what we want to see, because we've got dollar weakness at the moment in the market, here's the dollar weakness. Because we've got that dollar weakness, we only want to be trading the US dollar CAD if we get something that is bullish for the Canadian dollar. The bullish news for the Canadian dollar will be a draw in inventories. So a minus 4 million, that kind of level, or even greater than that, minus 5, minus 6 million, will be bullish for oil and will be a US dollar CAD sell position. And we could look at selling at market, or if we break through that S1 level, you can see here, well, look at this, you have potentially a, so potentially get a break of that trend line lower. If you got a break of that trend line lower, you could look for a retracement back into that S1 support level if price breaks through. So that's what you could potentially look at in US dollar CAD. Yeah, sure. When is the US stimulus check expectations? Right. Because there's elections in the US, there's a couple of different programs. The Republicans have a program, the Democrats have a program, and they're all trying to work it out. At the moment, Europe has the heads up, the head start on getting a stimulus package done. So I haven't got a date, and I know it's being debated. So still needs to be found out when that US stimulus package is. The complications with the package is we have an election, Democrats, Republicans, obviously they're going to be arguing, disagreeing, and approaching the electorate with different plans. So whether something gets passed before the election, I'm not sure. I can't remember off the top of my head, Schwa, but I think it's an ongoing situation, and it's certainly not imminent. It's expected at some point in the future, but it's still to be arranged. Right, Trib, Euro New Zealand dollar long. Let's have a little look here. Right, Euro New Zealand dollar long. Okay, now, interesting. Euro is broadly strong at the moment. We have Euro US dollar taking out that 1.115 level. European Relief Recovery Fund, optimism about solidarity in Europe, falling COVID cases in Europe is generally supportive for the euro. We also have this sort of ascending trend line being tested. We draw a line from all the way back there. You see that this, we have this major trend line not too far below prices at the moment. Looking at the New Zealand dollar, we do have New Zealand dollar strength at the moment as well. You can see, looking at the New Zealand US dollar, you can see strength coming into that market of the high beta currencies. So at the moment, now my bias for this currency pair is neutral, because we have reasons for euro strength and reasons for New Zealand dollar strength. However, I will just point out to you something. Price is consolidating into a nice little triangular pattern. Okay, you can see here, just moving into this nice little triangular kind of general pattern here. Okay, now when you get market movement like this, it tends to be a precursor before it breaks out. Okay, so what we want to see here, what I want to see here, Chibuvan, if I saw reasons for euro strength or New Zealand strength that was strong, so say we suddenly had some strong reasons for euro strength or strong reasons for New Zealand dollar weakness, then you'd be looking to trade the breakout. I'd be looking on the daily chart, I'd be looking for a break of these levels, a close, and then looking for a move higher or a move lower. But I would want the fundamental reason to join that. Yeah, Salman, how will further US stimulus affect the US dollar? Okay, so further stimulus, the expectations are expected to weaken the US dollar. Because of all the quantitative easing and the reflation trade in the US, the broad medium-term picture for the US dollar is weakness. But we have to depend and see what the package exactly is. We need to get some more detail to see exactly how the US dollar responds to the package. But the medium-term expectations are for medium-term US dollar weakness. Yeah, that weakness should carry on. We may see a spike up if we get a package. I'm not convinced about how the market's going to respond to further US stimulus, and I'm focusing on the US dollar weakness story at the moment, which does make sense. Okay. That's great stuff. There is one little other situation I wanted to draw your attention to. Yeah, you're very welcome to. One little I want to draw. It's no, it's okay. I think I'll save that from the time. Just do check. I'm doing a post tomorrow on forexlive.com. I'll just put the website in there about. It's on that website there. I'm doing a post around 7:30 GMT time, and what I'm doing is a post on the US dollar Indian rupee. There is an interesting development in that pair. If there are any Indian rupee traders, do check that post out. You may find it of interest. Okay, guys. Well, thank you very much for the session. It's been a really good session. Thank you for all your questions. That's really been very, very good. And don't forget, we are here on the Mondays at 12:30 GMT. Yeah, how to follow me on Telegram. You just go to, it's called, I'm just gonna, yeah, here we go. I'm just seeing if I can copy the link. I'm just trying to copy it now for my Telegram link. Okay. Well, I'm going to try and pop it in here and see if that works. There, I've sent a link there that should show you, and it is called Forex Trading Smarter Investing. Forex Trading Smarter Investing. So I hope that should be enough. Failing that, just email support and ask support for HYCM's Telegram channel, so you can get get on top of that. Yeah, no, you're very welcome. Thank you, everybody. It's been a great session as always. Please do have a very good trading week. Don't forget to look out gold and silver markets. Don't forget to keep a close eye on those markets at the moment, and obviously watch out for that risk tone today as well. Thank you all very much for your time, and I hope you all have a very good afternoon. Thank you very much. Goodbye.